Right, good afternoon, guys. I hope everyone is well. Appreciate the ones taking out the time to watch this video today. Hopefully, you won't regret it. I do advise watch it till the end. I'll try to keep it short as I can, and I'll be breaking down support and resistance, right? Various versions of it, how the industry is kind of misleading us in regards to explaining support and resistance and how I used to make mistakes before when I thought I understood it, and how I be using it, going forward. That's really helped me in my trading and investing journey. So yeah, I'll just get right into it. So I'm guessing most of you will already know what support and resistance is. For those of you that do not, uh, support we just call it when price comes to a certain area, right? Makes a cushion and price holds in a certain area and moves away. Resistance is like a ceiling, right? When price is tapping a certain area and failing to accept higher and therefore starts reversing in the opposite direction. So generally, support and resistance is not taught in the right manner. Now, one thing I just want to put out there is I'm not saying I'm perfect, right? Any strategy, any approach when it comes to investing or trading, right? Everyone has their own way or own edge. Nothing has a 100% win rate, okay? The key is trying to make it simple and understandable, right? Now, the normal way I initially used to approach it was we were taught classically um, support resistance where your average body candles are, right? Put a flat line there. That's your resistance. Where your support is, where your body candles are, put a line there, and that's it. That's your support and resistance, right? Now, another thing that we come across is not many really show you on how to actually trade or invest using support and resistance. Most of us, when we jump into support and resistance, we just think, right, either we're trading gold or we're trading forex or something. Um, and yeah, it's just purely made for short-term trading. Not really, right? Support resistance is just like any other. It allows us to just read price of where it's most likely to go, okay, and then we make a decision based on that and execute the trade or investment accordingly. Now, the way we used to approach this at the beginning was, let's say you've got your lines marked out, right? So it was if we were going long, right, anywhere, set a limit, mark it, stop slightly below, right, or give a bit of room, random stop losses, and target your resistance. Okay. Now, the thing with this is, yes, it can work several times. Okay, maybe you have a lucky run, but the issue with this is it's too strict on price. Okay, end of the day, we can't really control price. So what we need to do is we need to give a comfortable zone. It's what we call a zone, right? Where price, we allow it to roam around in a certain area and let price tell us what it wants to do. If we force price to fix into a certain area, okay, that's not really reading through price action. So this is kind of where a lot of the times you get stopped out so many times, okay? You'll find you enter a short or you enter a long, you target, you take profit. What happens? The market comes up, takes you out, and then goes without you, and then you start catching the move, and blow accounts or go in massive drawdowns. Okay, the same way. Let's say we're not taking a short-term trading approach. We are taking an investment approach, or we have a certain area marked out as support that we want to just buy. We want to accumulate some positions, right? Same way, if we have a line and we don't truly understand what price is trying to tell us, every second or every minute it goes up and down here. We're just going to be like canceling out, getting back in, canceling out, getting back in, and we're probably just going to get annoyed. We're not going to have a clear direction, and maybe we get annoyed, we turn off the markets, and the market either goes away or starts nuking down. Um, so this approach, it did take me a while to kind of get away from, but um, I thank myself now. Now the other one is quite similar. Is just taking the extremes of where a swing move has occurred. So for example, if we look at this support area here, we can see the wick, right? It attacks this area here. So just draw a line, and draw a line. Sorry. And let's say this is a high point, so we draw a line there. Now, yes, visually it looks fine. You can see we are within a trading range. Okay, price is establishing support, going to resistance, but it's the same sort of concept. We're not giving it's not information. It's just a line with seeing. What if we want to buy here, and the price doesn't touch our line, and we want to buy on the line, and the price goes away. Then maybe once it does touches, that's fine. Same. Let's say for example resistance, right? You want to sell at resistance. You don't understand exactly what the candles are doing, what price is trying to do. Okay, you come short. You're like, okay, do you know what? There's still room for the price to go, but then the price might just fully reverse. It might not even touch the line at all. Okay, so it's same again, we are restricting price over here, right? So the approach, I like. I mean, it's not my thing. It's just the way I taught, from experience years in the game. It's about just making comfortable zones. So it's using the same concept, right? But understanding what it's telling you. So before we even dive into drawing our actual zone, we need to understand what the candlesticks are actually telling us. So firstly, do let me know if you want me to make a separate video just explaining, actual candles, what the wicks are, what the body is, high probability candles for reversals, high probability candles for continuations. Okay, I can make a video on that. Now, what we are looking at these wicks. Okay, so when we look at this price, if we look, we're just talking about Bitcoin at the moment. When we look into this area, what is this telling us? Okay, so the two key things I want you to take note of throughout this video is bodies, right? Candle bodies and candle wicks. Okay, so the wicks are these faint lines you are seeing. The bodies are the actual thick rectangle part. Now, when price is seeking lower, okay, and if we are seeing a lot of wicks, right, that means sellers are trying to push the price down, right, but buyers are stepping in, right? These wicks are buyers rejecting this area. Buyers are saying we don't want to let sellers win in this area, so they start buying. So that's what you're seeing with these wicks. So the more wicks you kind of see in a certain area, a certain zone, that's where you can establish a potential true area of support, a true area of where buyers want to be present. Okay, vice versa, when price is seeking higher, you want to see if there are quite a few wicks, right? You don't want to really be seeing that. So if your expectation is you want price to continue going higher, you don't really want to start stalling and start seeing a lot of wicks and rejections at highs. Okay, that generally means the price is going to possibly reverse from this area. It means sellers are in control and buyers are getting weak. And if buyers don't start closing through, what's going to happen? We're going to start taking a reversal down, right? So from understanding this concept, uh, this is where we can start drawing our potential zones, right? Potential areas where buyers are present and sellers are present, okay? So if we just go to our rectangle tool here, now what I like to do is I like to see an average zone, so multiple retests. It's even better if you get a larger swing. Now, before I move on, sorry, I'm all over the place. One thing I do want to explain is whatever you learn, whatever you use, whatever strategy is, whatever concept it is, it works throughout every single time frame. Now, one thing to remember is we're looking at the weekly time frame here. So, any key level we talk about, any key strategy, any key trading concept, okay, the higher the time frame, the more respectable that zone or concept is going to be. Okay, so for example, if we were marking out support on a 1 minute, yes, you may get your initial respect of the level, but it doesn't give you the full picture for the entire day. Whereas on a weekly time frame, where each candle represents a week, so 1, 2, 3, 4, so 5 weeks price has been in this area and failed to go lower. 5 weeks is a lot of time, so that shows buyers have been holding this area for a whole 5 weeks. Okay, so the higher the time frame, the more important that level is going to be. Okay, now, so if we have a look, we've seen multiple retest here, retest there, retest here. Where's our average, right? So I want to cover as much as the wick as possible, right? Start from the body, but I want to get an average zone. A lot of it is going to be trial and error. You eventually will get it. Okay, but if I have a look, my average is like around here. I'm just going to mark this out. and then that is my true support that I've marked out now. Okay, let's go to the opposite for resistance. Can see rejection here, a few rejections there, rejection there, rejection here. That's a bit out of the way. Where's my average? Like I said, I want to kind of start at the body. If we do something like this, maybe cover that much high, I'm happy with that. Right now we can see we've given price a comfortable zone that it can do what it wants, but it'll still give us a picture. Okay, so remember, uh, just a few minutes ago I talked about wicks and bodies. Okay, so when we look at price, when we look at a range support and resistance, if we want price to continue going higher, right, what we want to see is we want to see candles closing, right? We don't want to see wicks, we want to see candles closing past this area and accepting that resistance, right? Accepting that it's going to break through that resistance and flip it back to support, right? If we see rejections, if we see wicks, what's that? What does that mean? It means this resistance is holding price, right? It's like a hammer is here and just hammering price back down. The complete opposite side, okay, we can see this zone is comfortable, right? What we don't want to really see is we don't want to see this zone getting weekly candles closing. We're on the weekly time frame. So whatever time frame you're on, you need candle closures on that time frame. Okay, so if it's a weekly support and resistance we've marked out, we want to see weekly closures. That will give us an idea where price is likely to go. Okay, so I do apologize if you're hearing a ping in the back. It's just the Discord. I'll remember to mute it in the next video, so apologies for that. Um, so okay, so getting back to support resistance. Now this is where we want to see uh, a range. Okay, so now we can see we've been in this range from January 21 all the way to May 2022, right? Obviously, it's a weekly time frame, so it's going to be a lot. Now, let's say, for example, take short-term trading to a side, forget about that. You want to be a swing trader for like, holding something over a few weeks up to 1, 2 months, or you were just being a general investor, right? A short-term investor. Now, with Bitcoin, once this is established, you could be this is kind of where you don't have to have a fixed stop loss because now, by the way, this is more for not with leverage, because with the leverage you do, and like short-term trading, you do need a stop loss, because if you're going to wait for candle closures, right, you could be in a massive drawdown. So I'm just going to give an example of just reading the Bitcoin price throughout this period. So now let's say, right, you go into the markets, you've seen a run up, you know what support resistance is, you were seeing a lot of rejections, we weren't accepting above, and you thought there's already support being established and you're willing to wait. Okay, now let's say the market does actually take a decent drop down, almost 50%. You're like, you know what, that is a huge drop. I do believe the market should get some relief around this area. Then we're starting to see we spend 1, 2, 3, 4, 1, 2, 3, 4. We spend around 2.5 months over here, okay, for accumulation. So it gives you ample time. Now, every time it goes into this zone, let's say around the 30K mark, you're like, you know what, I'm happy to start buying some Bitcoin around this area, because what is my invalidation? So invalidation means your trade idea is cancelled, right? It's gone the opposite way, because what have we learned? We've learned at support, if we're seeing wicks, it's fine, right? But the minute we start accepting below, when candles start closing below on the weekly, below this area, that's where we get to our danger zone, and maybe we need to cut our position, because if we lose support, that means price may go lower down. Okay, just give me a second. I'm actually going to close the Discord so it doesn't annoy you guys. Okay, that's fine. Right, so let's say, we've accumulated positions and then the market starts moving in the opposite direction. Okay, now let's say, for example, you've just got into the fresh bull run of Bitcoin. You're talking about 100K, 200K, people are saying it's going to a million, right? We don't know anything. We can't always expect anything. It's good to keep your expectations at a reasonable level. Now, what we can notice or learn from beforehand is that, you know what, this is actually a zone where we spent a lot of time previously and we couldn't accept above. So now what we can do is, okay, we have a first area that we can target. Okay, that will be this resistance zone. Now, when we are in this position, we're targeting there. So what does it look like, right? So it looks like, let's say, an average we bought around 31k. If we candle closes, maybe we're risking between 10 to 15%, depending on if we, how we get a closure, and we going. I mean, so we're risking potentially 10 to 15% to make a 2x on our position. That is absolutely insane risk to reward ratio. Right, I'll talk about best risk to reward ratios maybe in another video. It's how to manage risk. Like normally a 1 to 2 is perfect, right? Let's say you're risking 15% to make 30%, that's considered insane. But risking 10 to 15% to make 100, that's beyond insane, right? Now, so that's our first zone. So even as an investment, short-term investment, let's say you're happy with that, that's fine. Maybe you close half, you want to see how we react, okay? Now, what do we want to see here? We want to see weekly candles accepting above, right? This one tries to do it, but look, it still can't fully accept. We don't fully close through, and then we get the following candle close back inside. Now, what that shows us is we can maybe even wait for another week, right? That shows us that the market failed to go higher. Now it's come back in, it's rejected again. There's a high chance it's going to come back down towards support, right? So just reading that, like this is the key. Once you can understand like support and resistance is just more than just or looking at a video that's got 10 million views, just to make the next best forex trade, right? Like it's it can be used in investing, trading, like anything to do with the markets, right? Like here we just, a lot of people think that it's just used to get in and out of positions, right? But here we're managing our position as well, right? Like because let's say I remove this now, okay, and we made fresh all-time highs. Like, yes, the price could go in, but it's a guessing game. Now, don't get me wrong. Sometimes you can get a fake out where price will come back inside. Let's say you close your position over here, and then random news comes and the market just starts pumping away, right? That's just unfortunate. You can't control everything. But just like any strategy, it's the win rate over a prolonged period of time, right? What's your average positive expectancy using that concept? So that's what it comes down to. It's not just about one or two little random moments. So, that's one way of using that. Now, let's say price comes back down, you decide to, okay, I may have sold my position. Um, I'm just going to get up. Obviously, once you're starting to rise a decent amount, it's advised to at least have alerts or near break even, because then it's a risk-free position, right? You don't, because what about one day you're asleep and the market just comes back and you're in a drawdown the next morning you wake up. So I just have a rule of thumb. Once you're up a decent amount, maybe 10, 15% from this area, 20%, just set alerts near break even, then it's risk free, right? So for example here, the market doesn't quite get into our zone, right? Maybe we miss it, we let the price go. Okay, we're never chasing price. Now the price comes back, okay, but now it actually went under our zone. But what's the key? It didn't close, right? But now let's say we're getting a bit panicked. We're not sure. We want to wait a bit. Maybe we want to wait for another couple of weeks. But what we can see is the market. It's not like it was closing back inside above the range. You can see here the wicks were inside, but we were closing back above. Here the market is kind of testing the bottom. So that can be a sign of weakness where the market keeps testing the bottom of support without going higher. That can be a part of weakness. Then we can see we actually do have a weekly candle close below the support level. Now this is probably where any positions you have, you just cut, and that's going to give a sign the market is probably going to go a bit lower down, right? That's why you wait out for the range to play out, and then we have another range. So you can see how you can use that. Now one key thing that I want to show and teach you is um, it probably happens 8 out of 10 times. It's what we call deviations, right? So even with short-term trading, let's say you have a range, okay? Um, so the market is just range bound, right? Now it's what we call liquidity. I will do another video on liquidity. The best trades to take. So for example, let's say you're looking for shorts, right? You're looking to sell the market. One thing is what you want to do is what your high probability setup is. You never want to just set a limit or just short here. What you want to see is you want to say what we call a deviation, a fake out, right? You want to see price rally through highs, okay? Then you want to see a failure of price going higher, right? And then coming back inside and failing to accept. That's the trade that you want to be taking, playing it down either halfway or back towards support. The same way, right? If we've been range bound and we're not the market's not really going anywhere, okay, if we break support, look for a fake out. So if you want to be a buyer, your high probability buy is going to be a potential fake out, coming back inside, reclaim that level, right? That's going to be your high probability buy, targeting the upside. Okay, one rule of thumb with testing that I came across was as well that generally speaking, when you're in range bound, minimum you're going to get one test on either side, right? So for example, let's say you're in a range, okay, and no side has been broken out yet. Let's say, for example, the price tries to break out to the top side and it fails, comes back inside, right? If the price hasn't broken out from the bottom yet, right, there's a high chance the next few retests that's going to happen, right? So then if it's a fake out, you get back in, you look for the trade playing back higher. But if you close through, then that means that actually was a fake high and the market is going to seek lower down. Okay, don't worry, we're going to get onto some examples. You know, you could be thinking that it's easy to talk about in hindsight with historic price action. Um, we'll go through some examples and we'll go through like a current range that you can watch for the rest of the week and see how price reacts. Then also at the end of last week, I did take a gold trade. Um, Obviously, I used different concepts and confluences, but support resistance was part of it. Um, so to be honest with you, I was thinking of making this video since last week, but I wanted to have an actual real life example and then show you guys and then make a video on that. Um, so that'll be decent to get through, right? I'm just gonna see the recording. So we're 20 minutes. I'll try to wrap you up in another 10-15. I will try to keep them around 15 to 20 minutes, but it's quite difficult. Now moving on. If we can see now, right, with this support, right, the market comes back down. Wait for a range to establish, and we can see an average, right? We see an average wicks around here. That is not the average because that is away from the range. So what we're going to do is we're going to mark this out, right? Uh, Mark this out here. Oops. And then we got resistance again. There we go, right? And then let's say we have another resistance here as well. Okay, so now let's say for example you were an investor now, okay? You sold the top, you expected the market's gonna share the bed, or you just come into Bitcoin throughout this area. Now it's in the bear market, right? You don't know where price could go. But now let's say the price starts making a range and you're like, do you know what? Price was at 70k. At 50k, I mean a 50% discount, it was going higher. Now we're literally all the way to almost 15 to 20k area. And you're like, I don't mind, I believe in Bitcoin in the long term. This is an area that I'm willing to buy. But using this range now, you're like, okay, I'm gonna buy stuff around here, right? If it loses, so let's say for example you buy an average around 18k, it goes to like 16k, right? What's that risk about? Same again, between like 10 to 12%. Let's say you decide to get out, right? So you've accumulated your position. You might not have a full position, but you end up closing because we lose support, and you're like, do you know what? I can't see a clear area. A Bitcoin could get ugly. Like this shit could just nuke. You get out, right? So now remember what we talked about deviations. Okay, let's say you're out. Now price comes back inside. Okay, yes, it's not. Now you have two options. Either you wait for a retest, right? Or if it's in that same range you were willing to buy. So look, if you were already buying between like 18 to 19k, this is only 20k, right? So it's still near the decent area. So let's say you decide to buy your position back, you start accumulating for a few weeks, it hits resistance, it fails to go higher, so that gives you confidence the price is actually going to drop, right? It goes near support, not quite at support, but it goes near abouts. So now let's say your average Bitcoin price is 2021k. Okay, now what we get is we actually break through resistance. You can see here, market comes back down, respects support a few times, right? Now we're back in this trading range, right? Also, where did we reject off? We rejected in our original big ass support level, right? So you can see how important this was. So if this gets accepted back above now, we can see the market will most likely go back into that old trading range, right? Then what happens? The market actually accepts above. You can see a true breakout, and then slowly, the market ends up going higher. So you've gone from, let's say, you lost 10, 11%, right? But now you're in from 20k. You're just holding. Oh, sorry, wrong tool. Um, like absolutely insane. And you're risking what? Still about 10, 15%. So even minus your, let's say your max loss 15%, right? You're still up at least 210% or so, right? And then obviously from here you go into another range. So let's say the market is rejecting over here, and vice versa, right? I'll make another video, maybe depending on the feedback on this. I just don't want to spend too much time on one specific thing, right? But it just shows you that just having a comfortable zone, right? Just watch this video maybe twice if you need to, right? And then the time frame is important. So like anything like a short-term investment up to like mid-term investment, that's where the weekly and daily time frame are very important. And like I said, the weekly and daily zones are going to be the ones that are respected the most. Like you can see this zone, how important it was in 2023, right? From the zone that was created back in 2021. Okay, if this was like a 1 minute, 5 minute time frame, it's irrelevant. Anything for maybe you want to hold for like 1 2 weeks, that's where the 4 hour time frame is slightly more important, or uh, a bit more usable. Okay. Now let's say for example current BTC price. Okay. Let's say now same kind of concept. We dropped all the way down here 50%, and you're like, do you know what? Current day, I'm happy with 60k BTC, but I don't know where price could go from here. If we use the same concept, yes, it's not as clean. Our range was much larger, right? This is kind of where the market's trending, so we have to adapt slightly. But we can see if something is not too clean on the weekly, go to the daily, you'll have a bit more price action. So we can see rejection here, kind of go higher, come back down. So we'll take an average. So I would say there's a bit of resistance over here, and then my support, my average, you can see is I would say around here, right? So you could use this current range on Bitcoin. Like this is live price now, right? I'm not using anything in hindsight. So now, for example, let's say you bought some at 60k, market rejected. You bought, so you want to accumulate Bitcoin at 60k. What do you want to see? Do you want to see market accept above it and go higher? But the minute it came back down, that's where you're like, do you know what? Maybe I take some profits because we're going to come back to 60k, right? So let's say you do in fact take some profits. It went up around 37%, right? You took some at 20%, which is fine. Okay, now we are in a clear support, right? So we can try to see the market did deviate, came back inside. We're still back in that 60 to 63k mark. So let's say if someone was accumulating here, if we were to have a weekly candle close below, that could be a sign, right? I'm quitting my position, I'm waiting for a clear direction. Either I get back inside with strength, right, or I wait for my next key area. And what is another key area we can see? We can see to this side, support. This was a bit out of the way, so it's not the average. The average looks like it was around here, right? So if you just draw that out, oops, we pull that across, then we've got a zone here now, right? Look, I don't want to just have multiple zones all over the screen, but this one's important. Now, you can see here that if we do get a candle close, most likely there could be another like maybe like a 10% drop or so, and that's where you can start buying. And from here you can see like if we actually end up cooking this zone and staying below it, that's probably where you just sit on your hands and just wait for price to do its thing. Maybe look at fundamentals and let full accumulation start happening, like full bear market type of accumulation, right? But for now, let's say we're in this trading range. If I'm going to see higher prices, or I'm going to have confidence that okay, possibly this price is protected for now, uh, I want to see this flip, right? Hold this, and then it probably trends a bit higher, right? We fail this. This is kind of where we're talking about low 50Ks possibly catching the next bid. Okay. Now, same way in stock market at the moment, right? Give you a real time example. So if we have a look at the stock market, it's been trending absolutely crazy. But since May, we've just been stalling in an area. Now, when the market's in a range, that means indecision in the market, right? You're not sure where the market could go. So if we go to the daily time frame, and I've been using this as well. So if we have a look, same concept, right? Yes, it's a bit choppy, but if we have a look, market kind of came down, multiple areas came down here. So if we get an average of our support, I would probably say, like I'm happy with that, like this area here, right? You can see this was a deviation, that was a deviation. We're seeing multiple tests of support here, because that's where the average wicks are, right? You could do that, right? And anywhere in this area is fine. Where you're seeing the average deviations are fine. If I look at the top side, your average is probably around here, I'd say. Right, it doesn't have to be perfect. Just give yourself like a comfortable zone, right? I'll just include the high in anyway, right? Just give yourself a comfortable zone that you can work with. So now, with me, the stock market has been ranging since May, right? So every time, like, so, caught some positions here for the swing in the semiconductors. Later on this week, I'll probably make a video just going over the stock market. Um, so hopefully that should help. Now, same concept here, right? What I'm looking for, I'm on the daily time frame. If I start getting daily and weekly acceptance above the zone, that's probably where I'm going to have confidence, right? The market is going to go higher. But if the market, let's say, breaks out this area and comes back in, that is a bit of a bearish signal, a sell sign to me, because most likely the stock market is probably going to shit the bed back towards here. Just like here, right? Where the market tried breaking through support, it came back inside, gave opportunity to buy, and that was strength, right? You can see the stock market started rising. Now, if the stock market ends up cooking this support, right? Like so, previous times it tried cooking it, but it came back. But if it actually stays below this time, that's probably where it gives you a signal that, you know what, let me actually take a step back, let the stock market do its thing. Maybe we got some fundamental news, let it come to an area where we can find a discount area to maybe buy some S&P or look at some stocks, right? The easiest way to approach it, if you want to buy some stocks, if you're buying stocks when the S&P is at a key level, a key support level, a key discount area, the higher chance you're probably going to catch a decent risk to reward play, right? If S&P is at all-time highs and you're full porting stocks right now, it's not a good look. Okay. Now, just to finish off, I'll go over this example. I was using the 15-minute at the time, but same sort of concept. Like I said, I was using different confluences. Um, if I can actually find where the heck it's gone. Sorry, it wasn't gold. My bad. It was NQ, Nasdaq. I'll just move this out of the way. You can see, sorry, it's got a screenshot there. You can see I actually did trade the range. Did several moves there as well. Was made a decent amount that day. I'll just get that out of the way now. So you can see here now on the 15, um, it was a bit of like a day trade. So, like I said, I was using other confluences, but it's the same concept, right? Um, Ended up it was going into Friday for Thursday Asia session. I was on the market at this point in time, and then I had seen a potential. We've established some kind of support and resistance, right? Making like a zone. You can see here we tried breaking out. Market came back inside. We're doing a short here, right? Market is going back towards support. I was seeing we kind of bounce away from support, came back down into my London session timing. Respecting that, I did catch it a bit late because by the time I got on, the market actually expanded higher, then came towards a decent area. And this trade, I was planning to actually take it a lot higher. Wanted Nasdaq to break out, but in fact, so the actual trade looked like this. It wasn't really the best RR, but we take it. As I said, normally you would have you stop here, but as I said, I was using different confluences, part of continuation, right? Stop was below here, and I was targeting, I think, this previous high there. But what ended up happening was the market rejected this area, started breaking down, and I ended up closing that trade just using the concept of support and resistance, right? Then I wanted to wait for New York session. What happened was, you can see here, we're coming back at support. We're not really bouncing away. We're not seeing wicks, and we actually cook it entirely. Now, couldn't catch this short over here because the market just nuked, right? And then this obviously is a bit more advanced in this area. But you can see on the 5 minute, I was seeing the 15 minute because I was expecting the price to bounce in this key area we had. So you can see a wick here, a wick there, a wick there. So there was some sort of support established. Because I was already had my key area marked out, I was just using the 5 minute just to kind of clarify and refine the zone. And you can see that same concept, right? That deviation. So I had my 15 minute and 5 minute support established, right? I was in my sort of New York timing. The market came out, came back inside as it accepted above, right? I took a trade here, targeting initial resistance over here. Okay, ended up closing that trade. Now looking back, I should have probably kept that trade over here because that was my mistake staying on the 5. If I had gone back to the 15, I would have seen how the market is trying to reclaim that support turned resistance. Right now, resistance back to support. Now you can see how the market accepts back above that and then tries going higher. Of course, it couldn't tap the exact resistance. It fell off. The market failed support again. And what did the market do? Came back down to its previous range. Right now, we had a bit of a jump, but you can see the same concept, right? We did a deviation, market comes back inside support, right? And it actually ran to our major resistance that we had, okay? And we can see here the market tries to trend higher. So that's your fake out, right? It comes back down. It tested resistance again, right? And you can target previous zones, of support, wherever you wanna go. And then obviously we just got some really bearish news this week. Same sort of concept over here at the moment. We can see what's our average. There's a lot of average here. So I would say this kind of where it's got very, very messy. You know, obviously, like I said, everything doesn't have a 100% win rate. That's where other confluences tied together make a big difference. But if you have a look on the hourly, maybe, right, hourly looks a bit more cleaner. So we can see, I'd say if that is a anomaly, on average, it would be around here. Right, so same sort of concept now. Um, Obviously, it's a choppy environment trade. Like you can see, the price action is a lot cleaner, but this would just give me an indication of what my bias is, right? Where I'm expecting price to go from this area. So if we kind of hold this area now, right, expect NQ to at least target previous areas of previous ranges. If we get some acceptance below here, right, close below, back to resistance, that's where I think with FOMC tomorrow as well, we should be expecting NQ to drop a bit further down. Okay, so yeah, that's pretty much it for support resistance. Like I said, I will do more videos, um, but just stick to them simple concepts of you have a range, right? And look where the average wicks are, draw a comfortable zone. It'll take you time to get. Focus on the investing on short-term side first before jumping into day trading. Support resistance is not everything, but it's a simple approach that allows you to read price very, very well and have zones. Okay, it helps me on a daily basis. If I'm not sure where price is going, even with the investments, right, draw a zone out and it helps massively. Um, but yeah, appreciate any likes and comments. Let me know how you found this video. I apologize, it was more on the longer side. Um, I'll try to keep them short next time. But yeah, if there's any feedback, anything you want me to clarify within this, maybe you want me to break it down further with a simplistic approach, do let me know. Um, but yeah, I hope that was helpful and appreciate you guys' time. Enjoy the rest of your week.